of Moody's and ICRA for you. A lot of domestic as well as global factors at play as far as India's macros are concerned. Remember, it's also going to be the 1-year anniversary of the implementation of GST. That's another factor that worked. Growth has rebounded after the big hit that came in post-demonetization, and you had the first rate hike in 4.5 years that happened yesterday. William Foster of Moodys and Aditi Nayar, principal economist at ICRA, were in conversation with Swati Khandelwal Jain to put the macros under the spotlight, what it augurs for India going forward, and of course the big rating question on India and whether there's an upgrade coming or not. Let's hear them out.
Well, when we upgraded the credit in November last year, the decision was to move from Baa3 to Baa2 stable. When you stabilize, it's basically saying, India has really reached a level where we think it's going to take more time to get to an even higher level. And so you stabilize the outlook at that level, expecting over several years that you might see some change that would change the outlook. But the expectation is usually when you do make a rating change that's as significant as we did, that stable will be the foreseeable future until there's a very meaningful change over the medium term.
But what has been, your own observation in the last few months that you've put India at that rating, and have you, has India met the expectations? If I would, your own observation in the last few months that you've put India at that rating, and have you, has India met the expectations? If I were to say, while it's a small window and a period that we are talking about, but nonetheless, are we on course?
Right. Well, the view really and basis for the change was over a much longer time horizon. It was a medium-term view that the reforms that have been launched over the next few years, including, for example, GST, will over time result in a stronger revenue base, in higher tax collections, and improving fiscal picture, and sustainable high growth over the medium term that would bring down the high debt to GDP ratio that is India's key credit weakness. Sure. We're at the very beginning of that cycle, so November of last year wasn't even a year away, close to 6 months. So we have a ways to go to see how things will transpire. But I think what we're seeing, for example, on the revenue front, is I think some encouraging data with regards to GST collections, and the expectations around tax assessees and collections seem to be supportive of that view. Obviously, what's changed on the negative side has been global headwinds, right? So tightening global financial conditions, rates are rising globally, but more importantly for India, oil prices are higher than expected. But India is also in a stronger position to deal with those external challenges than they were in the past.
They are stronger, so the outlook is looking positive and encouraging, as you said. Aditi, coming in on the way we've seen, for example, the rate hike recently, and now inflation being looked into, but commodity prices have had their own concerns and pressure that it has exerted. Oil prices, well, they had gone up, cooling off a bit, but it's still on the higher side. Those pressures, how does one look at that, and how do you see that panning out for the next 1 year for India, and the challenges that it brings along for the growth?
Sure. So Swati, in terms of our CPI inflation, we have a notoriously volatile monthly print that comes in, and I think that's something that's going to continue over the next year as well. We're going to get lots of upticks followed by some base effect-led reversals, and it's going to be a fairly volatile chart going forward as well. So that in itself is the first challenge for policy making, being able to see through all of these dips and troughs and spikes that come in because of one vegetable here and one commodity price there, and base effects that ensue the year after. Now, in terms of the average for the full year, we think that the CPI inflation is going to go up to 4.6% in FY19 from 3.6% last year. So going back to the FY17 level, so yesterday's rate hike in that sense was completely warranted. So one rate cut we got last year with the dip in inflation has now been reversed, even though it's come in a little bit earlier than we expected. But we have a lot of uncertainty in terms of where our oil price is going to settle, and more important domestically, how are the monsoons going to be, and what finally happens as far as the MSPs are concerned. So those are the two big things that we're waiting for more clarity on. Hopefully, in another month or so, at least the monsoon will tell us how the sowing season will pan out, because it's really the first 2 months that are more crucial on the sowing side. And MSP is really what kind of inflationary and fiscal impact is going to have. Other fiscal risks, we'll get to know about more slowly.
So 2 months are going to be critical in that sense to
Absolutely.
assess
Yes.
the situation. All right, William, expectations of the fiscal policy deficit, and that I think is been the key challenge for the government as well. And now for example, the Air India sale is not going through. That was getting a big chunk of money for the government. And how big is a concern there, and what is your own outlook on that?
Well, the fiscal deficit target for the central government this year is 3.3%. We, at this stage, think that's achievable, but there's certainly risks around that. On the revenue side, one key risk is GST collections. They were relatively, it's the first full year really of collections, and so given the implementation challenges, there could be shortfalls. But what we've seen over the last few months seems to be that indicate that the collections are improving, and that things seem to be stabilizing somewhat. So there's reason to believe that maybe those numbers will be hit, and that's good.
William, coming back to the first question that we started with on the rating, and I think that is critical to know, because what is the next trigger, if I were to ask you to change the rating upwards or downwards? I mean, maybe 3 factors that can take the rating up and 3 factors that can perhaps bring the rating down, that could change things potentially from here.
Well, the most important thing is really the fiscal picture, and we talked about why is it stable. Stable means for the foreseeable future we see the rating probably staying in this area. But what could change that on the upside is material progress on the fiscal front. So if the debt to GDP ratio starts to really
well, that is William Foster and Aditi Nayar of Moodys giving us a sense of their outlook for the India story on the back of the strong growth numbers that we got for fiscal 18. But Rajesh, very quickly